Hello, hello, hello. Hello, and welcome to TIB, the Immigrant Bag podcast. I'm your host, Modupe Ogunyemi. If this is your first time tuning in, this is the place where we talk about tips and insights to help immigrants secure the bag. As always, we start with a disclaimer. This is not financial advice, and I am not a financial advisor. Everything we say on this show is for education and entertainment only. Please note that investing comes with risks, so please do your own due diligence or consult a financial advisor before making any investment decision. Okay, last week we started an absolutely exciting conversation with a brilliant special guest. And today we are bringing you a continuation of the interview. So sit back, relax, and enjoy the show. Okay, so let's talk financing because you mentioned it just now. So let's talk financing. Again, bearing in mind our audience is made up of mostly immigrants, professionals, people working the 9 to 5 and all that. How do you go about financing, and how would you advise someone who's listening to us right now who is interested? How would you advise going about financing? Because we know what property prices are like. Again, using Ontario as an example, especially here in Toronto and environs, we know how prices have run up during the pandemic. And even though, they are said to be coming down, and they are still super, super high, So, and the more units, the higher the price, I would imagine. So if you're saying, if the advice is actually don't buy single family, don't buy something that, you're going to live in, it's going to be a liability. Okay, so say I want to buy a fourplex now, or something like that. It's probably going to be much higher in price than even the single family. How do I raise financing for that?
Okay. So just a bit of context there. So the more units you go, the cheaper it is per unit. So, a single family property is probably like 600K. Once you're buying a fourplex, it will never be 600K per unit.
Right.
It will probably be like maybe 200K per unit. Now, at 200K per unit, 800K is too more expensive than 600K, right? But again, real estate is about location. So chances are that maybe a lot of Nigerians, maybe a lot of them are in the GTA, just an assumption. And prices in the GTA are maybe like in the millions, then you could move out, right? You could move out to places that are not the GTA. So, on the western side, you can start moving from Toronto GTA to places like Hamilton, Niagara, Brantford, Kitchener. On the eastern side, you could move into places like Bellevue, Peterborough. On the northern side, you could move into places like, Aurelia, Sudbury. Like those areas are not GTA, but they're also not as expensive as GTA. So, that's one thing that can be done. With respect to financing, so, this is pretty common knowledge. Anything between a single family and a 4 units is considered residential financing, right? So residential financing means the bank will give you the loan based off of who is buying it. So they're going to check anything you would submit for a single family personal residence, like, my income, my debt service ratio, like how much debt do I have? Do I have a car loan? Do I have this? All those things are required for single family to 4 units. So if you decide, hey, if you have financing from an A lender, which is like any of the big 4 to 5 banks, you can choose to buy a fourplex and nothing will change. The only thing that will change is if you choose to buy a 5 units, but the 5 unit becomes a commercial property. So anyone that has a mortgage doesn't have to do anything. They just have to decide, you know what, I don't want to buy a single family. I'm going to buy a fourplex instead. Nothing changes. The same mortgage or same approval that you got, the same pre-approval, whatever you got, would probably qualify because you were pre-approved based off of your income, how much you can pay mortgage. As long as that 4 units meets that price you were approved for, you could easily get it done without such a heavy lift. So from a financing standpoint, it's, again, 1 to 4 is still residential.
So would you need, so when you say residential financing, is living in the property a prerequisite for obtaining residential financing?
So you know, you give a disclaimer at the beginning of the show. Like, I would always advise people to speak with their broker. But when you live in the property, you could get CMHC financing, right? And CMHC financing means you could put down 5%, right? But if you don't live in the property, I don't imagine that you would get the 5% because you can't say it's a personal residence. So you probably would have to put down 20% as an investment property, right? So those are the rules around financing. But I would always advise, based off of anyone's unique situation, they speak with a mortgage broker, not a bank's advisor, a mortgage broker that is independent of the bank, who can give them, options across the A lenders, which is the banks, the B lenders, which is the credit unions, and then depending on their risk appetites, the C lenders and the private lenders.
So it sounds like, whichever way you choose to go, real estate is a business that you do need to have a certain level of capital in order to get started in.
No. Zero. Okay. Zero. Yeah. So,
tell us.
Okay. So I mentioned that there were a couple of books I wanted to reference to give credence to what I was saying. So one of them is a book called Money People Deal by Stefano. And the reason why I like that book is because, he mentioned that for every real estate transaction, there are three things that are needed. There's the money. Well, the book says it's money people deal, right? So those are the three things that are required, like money people deal. And the reason why I'm referencing that book for this question is because you don't have to have all three. At the minimum, you should have one. Where you want to be is to have two. So think about it. If you have money and you have a deal that that this deal is going to make me money, again, not the primary residence, like a deal. So if you have the money and you have the deal, you just need to find the people that would execute on that deal, to realize the money, right? If you have a deal and you have a team in place, like contractors, you have people in place, you would easily find money. Like, someone would fund the deal. Like, money partners would throw money at you. Like, hey, you have the team to execute on this deal, and you have a deal itself, right? So if you have 2 out of 3, you're in a very good place. But you just need to have one. So if you don't have money and you don't have the skills, so which means you don't know about real estate, but you're just a happy-go-lucky person who wants to get in, you can absolutely make money by showing up, being in the right rooms, like just reaching out to people, networking, right? By being available. There are investors today that would. Do you know that there's some investors today that if you tell them, oh, I have a credit score of 700 or 600 or whatever credit score is considered good, and I have a job, maybe my job is 6 figures, they could actually give you equity in a property or in a deal just to qualify. Hey, I need someone to hold the mortgage. Yeah, I need someone to hold the mortgage.
That's for them to qualify for a mortgage.
Yeah, because a lot of investors don't have 9 to 5, right? So they can't qualify themselves. They're like, oh, you work in 9 to 5. Oh, your job is this. Oh, wow, okay. You know what? Why don't you just hold the mortgage for me? And I'll give you 10%, 20%. You didn't have to put up your money for that, right? You just had to leverage what you had. So again, in real estate, it's always, what do you bring to the table? Everyone has something they bring to the table. You could be a rock star marketer. Maybe you do digital marketing so well. And then someone says, oh, wow, if you can help me find discounted properties and, these leads pan out, I'll pay you. There's so many strategies in real estate that people need to understand and see what works for them. But you find out not all of them need money. Like, you might need some amount of money. Like, it could be like $1,000, it could be like $5,000. But the notion that you need like 20K, 50K, 100K, like $1 million, to make money, that's completely not the case. You probably need like normal funds, right? Like, if you want to go out, you need funds to even put gas in your car, right? If you want to, like, you need funds to at least show up to an event. Like, if you want to go to a networking event, You wouldn't go naked, right? Like you probably would buy stuff to go for that event. So you need some funds, right? Like when I say you don't need funds, I don't mean like it's literally zero, but you don't, when people say capital, you don't need to have hundreds of thousands of dollars or millions. You just need to understand in what capacity can you add value. And that value doesn't necessarily always have to be monetary.
Right. I had a devil's advocate moment there when you said, when you were mentioning one of the strategies and you said, someone can, investors can actually give you equity in order to help them qualify for the loan. I don't know. It may be the Nigerian in me. I'm very distrustful. So I want to say, okay, so what happens if, the investor gives me equity, I carry the loan, and then they then default on the mortgage. They then don't pay the mortgage. That means I have to come out of pocket for that mortgage.
Right? So, so there's a bit of education, relationship, mentorship that's required to do real estate. Like a random Joe can just come to you and say, hey, hold this mortgage from me. And oh, yeah, give me X%. If you also don't know how you're going to exit that investment or, how you're going to mitigate the investment, it probably wouldn't be a good opportunity, right? So I would preface that, by saying, when I said joining mentorship groups, relationships, networking events, that's where you get in the rooms with people that are doing this activity, right? So as long as the person is qualified, the person has a track record, the person has good referrals, the person knows what they're doing, like there's also going to be agreements that you have, right? So if you want an agreement in place by a lawyer that says, hey, this person is responsible for this loan every month, or like you structure it in a way that works for you, right? Again, the person is leveraging your mortgage holding capabilities. And for that benefit, the person is paying you something. So if the person defaults on something, you could essentially sue the person. I just give that example to just let people know that, it's not a one size fits all game. Just understand that real estate is about leverage. Whatever resources you have doesn't always have to be monetary. It could be anything else. It could be your credit. It could be your mortgage holding capability. It could be your resources. It could be your background. It could be, it could be the rates you get. It could be anything, right? Yeah. So.
Okay, this is where we will be drawing the curtains on this week's episode of TIB, the Immigrant Bag Podcast. I'm sure you'll agree with me that it's been an amazing, amazing conversation so far. It's been super insightful and enlightening. Next week, we will bring you a continuation of the interview. So make sure you don't miss it. And on that note, until next week when we bring another exciting episode your way again, this is Mudupe saying keep your friends close, keep your money closer, and keep your family closest.